Hi, it's Jo and Steve from Freshagenda. And Steve, we've had a couple of weeks off, been a busy time. You've been up in Singapore at the risk seminar put on by our friends at NZX. How was that?
It's a good event. It's they do a good job. So it's got a growing crowd coming from risk management roles and finance and traders and buyers and suppliers. So it is becoming more global, up towards 200 people at this year's event.
So what was the mood like amongst the crowd? Because you were giving a global market outlook there.
Yeah, I didn't have great news for the crowd in terms of prices. I suppose we know the world's facing increased milk supply and more product, mainly from Europe and the US, I guess, with slowing demand there. So when we walk through that global scenario, what it means for the expected net supply growth in milk and how that affects product balances. I think most there are sensing there's quite a difficult time coming. Some are quite negative about the impact of that milk growth in Europe.
Mm-hmm.
So
what are some of the numbers we're seeing in terms of milk growth?
New Zealand's just put out confirmed the numbers for October, which are up 2.5%, I think, we've seen. So that's a sudden change. I think, though, that you never can tell where this is going to go. Now the talk is New Zealand's drying out, and we're seeing very extreme differences in conditions.
Yes.
So that will that may change that, and so that growth may not persist at that level. We go across to Europe, though, and the European milk is just surging at the moment against quite weak comparatives.
Yes.
The latest numbers that we've seen, which we processed from the data that came out in the last couple of days, September was at 3.9.
Yeah. So that's the EU28.
That's all the countries, yeah, with some adjustments because some of the numbers are a bit silly.
Yeah.
Weekly numbers out of France and Germany are still increasing, so they don't quite line up with what the full country numbers are. They're out of industry sources and they're a bit odd in parts in terms of their correlation. But they're showing it 4.5 to 6% growth between those two big regions. So that's quite worrying.
And I suppose one of the things that's happening there is farmers are getting a fairly positive signal in terms of milk price, which doesn't really line up with what's happening with wholesale prices in Europe at the moment, does it?
No, farmers have been encouraged to keep producing milk at a time when the market's falling. So the reported prices out of the market of what's actually transacted are still flat. For cheese is the one we're watching the most. It's the most sensitive in terms of the whole value of milk in Europe.
It's the whole game, really, almost. Isn't it?
So watching where those Gouda prices go. Recent numbers published by the Commission, they're still flat, but when you look forward into where the spot quotes are, they're doing a deep slide. So Cheddar hasn't been affected yet, which is more important back down in this part of the world. But watch this space because they usually connect.
Yeah.
And so that's something to be careful of. And when we look out at the back to what I took the group through in Singapore, that global cheese supply balance chart it's what you're seeing at the moment. That's the one that's got quite a negative connotation for this region, in particular, and milk prices in Australia.
Because we do have a heavy reliance on cheese in this part of the world, don't we?
We love it.
We love it. So in terms of the mix that we're seeing, are we seeing any big shifts? We've obviously still got this massive stockpile. Butter's, lightened off a bit but still quite high, and skim milk powder still in the doldrums. Are we seeing any shifts in European mix with this extra milk?
Well, month-to-month numbers can be a bit strange because of the timing of data, I guess, and what might be happening in a country level. Cheese is still well ahead, so cheese growth year on year is where we're seeing a shift in milk, but in the latest numbers, skim milk powder and butter had a little bit of a surge.
Yeah, just in the last month it's come back a little bit, hasn't it?
Yeah. So it'll be interesting to see where that goes as we go into their low period and what that means.
Should we skip across the Atlantic to the US?
Yeah, the US growth has slowed a bit. We have tipped this because the economics of larger farms is getting a little worse. The cheese prices have come down a bit. Margins are under a bit of pressure as a result of that. So we are seeing it slow down a little.
Yep.
But Where that goes, we're seeing, on the demand side, butter is still weak and cheese is very mixed. Food service demand is pretty slow, which affects what they call cheese other than American.
Yep.
So you think about that, but it's mozzarellas and all those other styles that tend to go on pizzas and in fast food. Whereas the retail baby cheddar is a little bit stronger.
Sure.
But, so it's a mixed bag in their country. And then, bringing it back home, I think just to round this out, this week we see encouraging signs of a weakening dollar. So while the dollar's settled now into the mid-70s, and not that that's got anything to do with iron ore, but
not the iron ore thing again.
It is on this chart. I'm afraid we've used that one, but never lose sight of that iron ore thing. So the dollar down into the mid-70s, 75, 76 range, and that's keeping up our commodity milk value, which is staying. Last weekend, $5.78 per kilo milk solids, still above our predicted full year average by about it's about 35 cents above that. So we're still bubbling along above the line, but with weakening cheese prices that may change.
Yeah, so we'll keep an eye on that, won't we?
Yep.
So
I think that's a wrap.
That's what we have here from the Sharon stand at Victoria Park. There's a couple of drop kicks already on the field. We might go out and do a bit of end-to-end, Steve.
Yeah, I think it will. That'll be good.
See you next time.
Righto.